Hey, out there in the crypto world, you're a DeFi IoT Latin America. Today, let's talk a little bit about not so much what we invest in like we did last week, but why we invest where we invest. I want to share that with you. Maybe it's something that interests you. As you heard from our portfolio last week, that we pretty much focus more on the mining side of cryptocurrencies. We also do a lot of holding, if you will, but 75% of our portfolio is in mining and producing new types of technology in mining. Why? What is mining? Well, let's talk about that. Don't go away. We're going to share with you some of our secrets. So why do we focus more on the mining aspect of cryptocurrency production and investment, if you will, than we do actually just buying the coin? That's been a question that's been presented to us. Thought we'd like to take the opportunity to explain, and kind of with the whole YouTube channel, we're kind of been all over the place, trying to find our niche. And with me being in Latin America, it's been difficult because with our English-speaking audience, generally speaking, you are more aware of cryptocurrencies and more advanced, we'll say, without lack of better words, in understanding cryptocurrencies and how they work. So it's kind of been difficult to do a video for our English-speaking clients or audience and then revert back to our Latin-speaking or Spanish-speaking South American or Central American Latin country clients or audience, if you will. So what we're trying to do is we're going to try to do everything and get back to basics, keep it simple. I was talking to a friend of mine, and he's very sophisticated. Been a friend of mine since high school. One day, and he basically said to me, "Yeah, I've heard of these things, and I'm kind of on the sideline because, I've heard good and bad, a lot of regulation coming out. I'm not sure what to do." I think a lot of us are sitting on the fence. I know I was. A few years back, I was sitting on the fence too. So I want to share with you some things, not necessarily what is blockchain today, what is cryptocurrency, but I want to share, as we talked about last week, I want to start getting into analyzing some of these companies. But without first, let's share with you how we analyze them, these companies that we do decide to put our 25% of our gross income into, and then we put the other 75% into buying new hardware to mine and grow the company. Right? Let's just explain a little bit about what we do with the 25%, how we analyze that. Then I want to jump into basically filling the rest of this video with what kind of mining can you do and why do we mine, right? So without any further ado on that, I want to show you something. What do we do when we want to find a coin or a token? Remember, a token is a fraction. The blockchain, and I'm not going to go into deep blockchain today, but blockchain is just another, if you will, it's another tunnel in the internet system. And in that tunnel, there's like this huge flow of water going through it, if you would. It's got a current. And that current, we'll call it algorithms, right? And that current has various different particles and parts to it that move it. And those are different algorithms. So that whole tunnel will be like a blockchain. And within that, you'll have different algorithms that will develop their own smart contract or their own type of software. And the actual tunnel itself would have its coin, if you will, right? Then when you get inside, you have a tunnel, if you will, like Algorand. Algorand would be that tunnel. And then inside you got that algorithm. And then the algorithm, you'd have, the whole thing's a big algorithm. You got these smaller algorithms in there. And then you would take the token, which would be like Planet Watch, would be a token on the Algorand blockchain. Okay, so to put it simple, I know there's better ways to explain it, I'm sure, but I could get some comments. People are going to say things to me saying, "Hey, that's not exactly how it is." And you're right. That's just an idea of what blockchain is. And so that it fits on this big universe we call the internet. Blockchain does. So in that, there's going to be smart contract ideas. And let's put it in simplified form. They're like business ideas. So the business ideas come up. Somebody wants to create a business idea. And maybe it doesn't fit the model of the normal financial or business structure that we've lived with for many years. there are many more opportunities that sit out in the actual blockchain crypto world. It's when you're going to fund something in crypto, it's not the same way as funding it in like dollars, if you will, a fiat currency or whatever your country is. So there are advantages, disadvantages of that. One advantage is that it's a free market, so you're more flexible in it. And when you gain confidence in that, you're giving away tokens, right? So basically, I got an idea. I want to jump on the Solana or the Solana blockchain, all right? I want to implement my idea in there, and I want to create this algorithm. So I'm going to say, look, people, I have this idea. Back me on this by buying my currency I'm going to give you right now. So if my idea then becomes successful and other people like that idea, and I get to an actual, what we call mainnet launch, a launch day where I can actually more so take it public, if you will, right? We call them, you know, IPOs, like initial public offerings in the traditional business world. These are called ICOs, initial coin offering, right? So I decided I have this idea, and basically like somebody backs it, like buying into it, like you would buy in penny stock. It gets thrown out there and on a penny stock exchange, if you will, and people buy into the idea, and they have those shares of those, not shares of a company now, but they have these tokens, which will be produced as I go forward more and more and more, but with a limit in mind, generally speaking, not all the time, right? So here's what we look for. Number one, we look for an idea that brings a solution to the world problems we have right now. And is that idea or that solution something that is just what I think or feel, or is what globally people are thinking or feeling? Now, we base our investment strategies on both, on what I feel, on what my personal philosophy and education tells me the way things should be, and what I see when I have an advantage. I get to travel a lot, but that should not really be an advantage. In my travels, I've been able to talk with many people. So I get a good idea in different countries. Where is this common thread at of what people want out of life? And when you get back to basics, people want freedom. And that's how blockchain and cryptocurrencies really came about with the whole idea with Bitcoin, right? So people in their own way, shape, or form desire their freedom. They may not even know that, but they'll go generally the route of a free market economy. People want that opportunity to be who they want to be. So I look for things knowing that that's a very common thread. That's kind of innate in many of us, most of us, unless we've had that denied to us since birth and we don't know the difference. But if we've had that, especially now, in my life, I've had that opportunity, and many of you have too, then we know that's a common thread that we want that. And some may think some freedom, less freedom is better, and some may think, well, I need more freedom. But along those lines, there's the idea of freedom. And when you get down to the end of the day, those who think less freedom is better, when they start getting less freedom, most of them begin to realize, hey, wait a minute, that wasn't such a good idea. That's not working out too well for me. And they come back to freedom. So I look for things. We look for things here in DeFi, IoT, Latin America, that are going to defend the whole idea of free market economy and allow people to grow and become wealthy. I don't care where you are in your wealth status. If you're poor, consider yourself poor, underprivileged, or whatever you might consider yourself, there are the opportunities. And we know there's a lot more people out there that would be considered poor, if you will. And so we look at ideas or solutions that are going to help us resolve that and help people build themselves up, because most of us want to build ourselves up. We want economic freedom as well. That all comes hand in hand. That's why many people go to America. That's the idea of the American dream in the past. That, unfortunately, is being kind of distorted and destroyed, if you will, but it's still there. And that's the idea that America always represented to the people. Agree with me or don't agree with me, that's the idea that America always tried to portray with the Constitution. Now, what we look at is what solution does this algorithm bring to the world problems and what people really want. Now, I'm not talking about world problems necessarily for what scientists and politicians are telling us, because Some of that, a lot of that actually is fictitious. A lot of that is made up by themselves and with an agenda to lead us down a certain road. And many people, because we're just used to being followers, since a young age, we're told to stand in line and what to do with the homework. We're told what to do. And to some degree, that's good because we're disciplined, but to another degree, we don't ever learn to become independent. We remain codependent. And that's why books like The 7 Habits of Highly Effective People was a phenomenal book for 20 years and still is today. So we look for solutions to real problems. Now, will we play on or invest in ideas that we think are good and that maybe the government's, it's a good idea, but they may be kind of ramming it down our throat, but we think the idea is good there and somebody's going to come in and say, look, let's get this idea developed the way it should be. Yeah, we'll go with that too. Okay, so that's an idea we look at. Now, how do we study that? Well, you just go on YouTube. Just listen to YouTubers and they'll talk. I don't say take for granted what they say, because there was some that I really kind of believed in and we jumped on what they said and we ended up losing. So you got to do your own homework. Remember, we are not financial advisors. I'm not a financial advisor. So what I'm just sharing with you is our experience. Okay, you need to do your own homework. Here's one thing we can do. It's called a white paper. I'm gonna hold it up here. White paper. Now, a white paper you can find basically pretty much with any type of algorithm that has an idea. It's like a business plan, if you would. There's some coming out now, I know, with some of the gamers that are coming up now with the whole metaverse idea that don't have white papers. They say they don't want a white paper. And you look at that and they, okay, well, they're kind of like just living off the cuff of what comes and goes. That to me does not give me a very sound idea of what I want to invest in. And now there are some out there right now that are being very successful and have actually gone and said, we don't do white paper. We don't like white paper. It's restricting to us. You always have a direction. Even in 7 Habits of Highly Effective People, Stephen Covey wrote, and we know this to be a fact, if we want to go someplace, we want to go a direction, we got to write it out. He always said the difference between a dream and a goal is one is written and one is not. The dream put into writing becomes a goal. So we like goal-oriented, organized companies. They look more professional. They're not fly-by-night. Do we invest in NFTs? Not really. Most NFTs are just a fly-by-night idea. Look what happened with this, with the whole Axie Infinity NFT game scandal that took place in our office over this last month, where we tried to experiment in NFTs. And we will continue to do that to try to find a niche in there. That's going to be a small area. We have somebody specializing right now in NFTs, spending a lot of time. We're going to send that person to actually courses in NFTs. They're doing NFTs right now. They have them on the market. And I'll just say this, but they put them out in the market, going the easy way, watch this from YouTubers, and they haven't sold anything yet. And they're pretty. They're nice NFTs. So there's got to be a way then to call better attention. So we're going to figure that out too. The downside is NFTs really are not that secure at this moment. An NFT you can hold in your cold wallet. Cold wallet's like a private little wallet. That's another video, but you can hold that privately where it's not out there on the internet anymore. So in summary is this. We do our homework. We look for a solution, and then we read. We read the white papers. You can find that white paper. Some are pretty thick, some are pretty thin. They're normally about 24, 25 to 30, 40 pages normally. But some are getting bigger, and some change the white paper. They adjust as they go along, and that's fine. I can understand adjusting. I'm okay with that. But I want to look at the conference. I want to look at leadership. I want to look at experience in that leadership. Where are they coming from? What's their overall agenda? Are they going to align themselves with a centralized or a decentralized market? We pretty much like to favor and support decentralization so we can maintain the free market, and that allows opportunities. So those are areas that we look at. Okay, that's just a basic breakdown. I want to get into the other thing now because I've taken a long time on this and get into one more thing here. Why do we mine so much? That's just 25% of our portfolio. Why is 75% of our portfolio, give or take, into the mining? And what is mining? I want to jump now over to, first of all, show you what some miners are. Basically, we have different ways of mining. You have the more common, what we've talked about now too. We even showed this yesterday. We should have this little box. This is known as a helium miner. Now, there's other type of miners out there. They're little hotspots is what they are. You'll plug this into your Ethernet, and you'll plug it in. Back here, you have a plug for the Ethernet. You'll plug it into your AC, your electricity, and it consumes like 5 watts, very little consumption. And your internet too consumes very little internet. And what that does, that works off, this is the helium hotspot. It works off of this whole idea, this algorithm called Helium. It's a project. And this project's expanding greatly. But I'm not going to get into helium, I'm just going to explain the different types of mining. So what this does, what's helium do for us? Well, if we hook that up, it now generates, it captures these lower radio waves, if you will, that are floating in the air. You know, you've heard the radio. And before cable, we had the TV, right? So you had these radio waves, these waves of intelligence, if you will, that float in the air and float throughout the whole universe. And we've learned to capture this. The internet is based off the same concept. We've learned to capture this and to control it and funnel this. So there's these unlicensed waves. If you get into like these, you know, the CBs and this whole ham radio, etc., they're higher waves and they're licensed. So you have to have a license to use these. With these devices here, these all work off of a lower radio wave doesn't require a license to use them. So that makes it available to all of us. That's why it's called the People's Network. That's helium. And what that does is it hooks in, it basically, if you will, recycles these radio waves and puts them out into a network, a certain area. And we use a hexagon in helium. And that hexagon area is try to connect it to another hexagon to create this web, right, in this network. And in that, helium does their project. Okay, so I'm not going to go to helium project. Now, there's another type of sharing that you can do. It's also for mining, and we talked about this the other day. This is a small, little, deeper device. Now, this hooks into as well. This will hook between your router and your modem, and this is what you call a VPN. Well, this is a bandwidth sharing VPN. So basically, the difference between the VPN and a DPN is a DPN will assign you to a different area, a different IP address, right? Or a VPN rotates it, and so you're bounced between different countries and so forth. So your IP address is always moving. This also offers ad blocking as well as other types of advantages to protecting your data. So, but does it mine? Yes, it does. What's mining? Well, basically what happens is this. Helium pays us to put this hotspot in our home, this one here, will pay us to put this hotspot in our home and help them create their network, and they bring in clients that use the network. So we're being paid, we're being compensated. Is that really mining? No, but in the program itself, it actually grows. It has a limit for the coin, the growth every year, and it reduces every 4 years. There's a whole strategy to it. So the coin holds a value, right? And it's kind of like, you know, oil or diamonds. If you have a lot in the market, the price goes down. If you have less in the market, the price goes up. So that's the idea between a lot of these coins and tokens, that they try to have, called tokenomics. They try to have a good strategy for tokenomics, and we study that. So when we study when we're going to invest and hold, we want to see a good tokenomics. We want to see it's limited. Okay, so that's a good point. You want to see that's going to be limited and it's going to shut off one day. That gives it a higher value, right? Especially if it's something that's desirable. It has a good solution to it, right? So those are two good points. Look for solution, look for tokenomics. Is it going to shut off their token production one day? Right? If they don't do that, then you know that's going to be a limited amount of tokens, which will, if the solution's good, is going to raise the value of those tokens because people are going to want to be part of that and support that still, right? They'll invest in that, if you will. The deeper shares is bandwidth sharing. You're hooked to your Ethernet, and it's bandwidth sharing, and you're sharing bandwidth with other people in the world, while at the same time being protected. And you can control the amount of protection you want, how much you actually want to share. Okay, so there's another way. There are others you can get into as well that share in the cloud space. There's other things you can mine with too on your cell phone, on your computer, Raspberry Pis. They don't necessarily generate a lot of money yet, but people are trying to get away from traditional mining because of the electricity consumption, the cost, and the overhead to run the traditional mining because of cost and electricity. So let's jump over to traditional mining real quick to close this out. Let's go to the screen. We're going to go to the screen now. Yeah. And I want to show you here. This is basically, let's go here first. This is a GPU mining rig. All of these are, if you look at this. You'll see all these here. These are GPU mining rigs. Let's show you what a GPU is. Well, GPU, basically, this is used to be able to actually mine Bitcoin just with your computer, right? Your CPU in your computer. Different from a GPU. This is a graphics card, right? A GPU is basically used for gaming, A lot of people have computers for gaming in them, and gamers, they have these GPUs, and they produce a graphics card that produces a hash that goes out into the cloud, if you will, and it goes out there and it solves a problem on the blockchain that allows you to process a ledger. Now that ledger is like a bank ledger. You go into the bank, you and a bunch of people go into the bank during the day, and you're going to make these bank transfers, right? I want to take money out of my account, and I want to send it to, John Doe that's in, Pittsburgh, and I'm in, Nevada, or I want to send it to John Doe who's in Japan, and I'm in the US, or vice versa from Latin America. I want to send something back to Canada or America. Well, you do that, and the bank will accumulate so many transfers, and they have a shut-off time, and then they create this ledger, and this ledger goes in. This is digital now in the bank. This is digital, very different. Remember, it's all known and all controlled. In the crypto world, everything, well, used to be everything, but in the crypto world, if it's decentralized, not everything is known. You know about the transfer. Everything is known on the transfer. There's never a time in history you can't go back and access that ledger, and all of us can access the ledger. In the bank, how many people can access that ledger? Well, once they say, well, for privacy, we only are the ones that can access it. They also can do what they want with our data. So in the crypto world, the idea is in decentralization is your data is protected. Nobody knows who you are. Nobody knows who the person is. They just know that at a certain time, this amount of money went on a ledger, and that ledger had a shut-off date and time. And what happens is that gets sent then to the other person. So let's look at the bank. The bank then says, well, at noon, we're going to send the money out. Anything comes in after noon goes out the next day at noon. And that's pretty much, a lot of banks do that, right? So you have a certain shut-off time. The bank builds their ledger. They have all these transfers, and then it gets processed, and the transfers take place. Well, those transfers have to go to different banks, bigger banks, down the intermediary banks, down the smaller banks, and the money never moves. It's just all digital. It's just all account balancing on ledgers in their different banks. And that's all it is. Money never actually leaves Bank A and gets to Bank Z. Whereas in cryptocurrency, it's not about just putting a ledger together. Back to the bank, a bank can take 2-3 days, sometimes 1 day, but normally it takes 2 to 3 days, and sometimes even more if they want to scrutinize your transfer. And they can also tell you, no, you cannot do it. They approve it. It has to be approved first. There is no approval, at least there wasn't until now, with Joe Biden, with the FATF and others, the World Bank and so forth, trying to colluding together to try to smother and really restrict the movement of cryptocurrencies due to the fact they're saying that they are untaxed and the money laundering issue, terrorism and so forth. But that, just so you know, the sideline only constitutes of 1%, and in fiat currencies, 1% of, let's say, a $3 trillion trading daily, to where you have fiat currencies that trade in much greater volume, and 4% of fiat currencies today are known as supporting terrorism or money laundering. So fiat currencies, the government's had control for years, and they haven't been in control of us. It's not about control. My personal experience, when I was a CEO in Latin America, my personal experience in dealing with the banks is I know that those banks don't do that to monitor that reason. It's for them to have the control and get their cut. And that's what it's all about. And that's what they want to do now. So let's go into then the cryptocurrency part of it. So we create this hash that creates this whole algorithm out there that makes it safe, where nobody can control it, nobody can hack into it. It's very, very difficult to hack into. Only a quantum computer can hack into that. So while with quantum computers being developed, you might ask me, what's going to protect that in the future? Well, that's the beautiful nature of a free market, is there are people out there now inventing ways that are going to make these anti-quantum, if you will, blockchain, and all blockchains will be protected under this anti-quantum umbrella. Okay, so I hope I'm keeping it simple enough. I'm going to wrap this up here. The idea then is, and we can get into actual mining and what makes mining work more later. So basically, in the crypto world, those who have these GPUs, these gaming, you can hook it up in your own home if you have one. You can go on and you can research it and see if your card actually works. You can go into an area called whattomine.com, and you can type in there what card you have, and you can check and see if it actually mines and what algorithm it mines on. And you can then learn, watch videos on that. You can go into NiceHash is probably the easiest one to get into. You can hook it in NiceHash. It's very, very simple, little software maneuvers, and you're mining. And you're actually helping create that hash rate in a pool, a group of people now, because you're by yourself, it's going to be very difficult to actually solve the problem and gain that ledger. Remember the shell time for the ledger? Well, crypto depends on what crypto you're mining. It has a ledger that produces as well. Could be a minute, could be in seconds, could be Bitcoins in 10 minutes, for example. So they say it's slower, but being slower makes it safer, right? So if it's faster, you give up two things. You usually give up anonymity and you give up safety when it's going faster. Okay? When it's going slower, you usually keep your privacy and it makes it safer. So you give up safety for one to get speed. You give up privacy to get speed. You keep things slow and you keep your privacy and you keep your safety. So it all depends on what you're comfortable with. We like the slower, safer, and anonymous, where we keep our things private. So GPUs, you can find those anywhere. You know, you can buy the Asic Miner, the AMDs, or not the miner, the graphics cards, the AMDs, etc. And then when you hook it up, you can hook it up by yourself on a computer, or you can do a rig like these. This is going to get a little more serious. You can do rigs of 4, rigs of 6, whatever you want. 2, you can set this up in this manner. And that's another video we have. If you want to look at it earlier, we have that. Now let's jump over here real quick. We talked about these kind of miners here. These are the Helium miners I just showed you. And then you have what's called Asic miners, which are a bigger miner. Let me see if I can jump in and find one real quick here. Let's jump in and see what comes up here. You guys with me there? Asic miners. Let's jump in and see if I can get a picture here. Actually, I want to get a picture. There's an Asic miner. Let's go back. That's the Mercado Libre. I want to go back and just go to images of Asic miners. Here we go. Here's an Asic miner. Let me try to pull these up here. There's an Asic miner here. And basically, these can be, you know, small little devices, or they're bigger, like what you'd known as a computer box, right? And they actually are more geared toward just a hash. It all started with CPUs in a computer, then gradually grew to GPUs, which the graphics cards we're talking about, and now ASICs. But ASICs are specific for an algorithm. And if that algorithm goes offline, like Ethereum is going to go offline, most likely to just proof of staking. In other words, they're not going to use miners anymore. They're going to use basically investors, and that money is going to get funneled to investors, and that's how, you know, so much money in investment is going to produce their coinage and so forth, their tokenomics. That's another story. What happens is that with those, you can't use it anymore. You got a brick, because when that algorithm shuts down or no longer permits mining, right? They don't want to be up in that cloud anymore. They want to do it a different way, a different strategy. Because now people are going green and saying, well, these consume so much electricity. But most of these now actually are producing their own electricity. And just keep in mind something, electricity is not a natural resource. I mean, yes, you can say, well, we block up rivers and dams and so forth, but there are many ways we can produce electricity in power plants, so forth, that are not that difficult on our environment. So, you know, you say, well, we got to go solar panels and things like that. Okay, that's good too, but what do we do with solar panels at the end of the day? So, you know, that's another solution. So, I mean, come up with. You come up with a solution on what are we going to do with solar panels and batteries for electric cars in 20, 30 years. What are we going to do? You come with that solution, I promise you, you'll do well in the crypto world. So this is mining. Why mining then? Well, we put most of our money into mining because mining goes out there and they're the bank. They handle the transactions. They go out and do these transactions, and we get a percentage of it. There's one in this pool, and we get a percentage of the cost that goes on. They call them gas fees, and we get a percentage of that. And that produces cryptocurrency, crypto coins. Now, I don't have to go into my bank and come upline into the crypto world platform declaring all my information. I can maintain also private, or we can, because we do everything as a group here. Everything is the business, and we create that free market economy. So we're helping the free market economy. We're helping what we believe in, and we're getting paid to help with those transactions. And that helps us then keep ourselves autonomous and be able to move our money, our cryptocurrencies, and we move that into fiat currency. Now, once we move that into our bank system, then we're no longer autonomous. So when everybody gets paid at the end of the day, everything gets brought into the bank system, gets cashed out, then the bank pays us our paychecks for our jobs we have assigned with the company here. So why do we focus on mining? Because if I'm in a cryptocurrency, I'm invested in it, like we talked about in the beginning. I've done my homework, my white paper, I'm invested in it, and that cryptocurrency goes down, I'm stuck. I can't move off it. I don't care what the cryptocurrency does if I'm mining. If it goes up or down, I'm still getting paid. I'm still profiting. So that's why we focus mostly on mining. We support what we love, and we get paid whether we're in a bull market or in a bear market. And that's what we do at DeFi IoT Latin America. Now, let's start going in next week and breaking it down for you, exactly how we do it and how you can do it as well. Don't miss us.